He's best remembered for telling investors to avoid stocks before the '87 crash. He has earned the nickname Dr. Doom, but he also can speak to booms and other such things that rhyme with room. Marc Faber joins us right now from Toronto, publisher of the Gloom, Boom, and Doom Report. Welcome, welcome back. Yeah, business is fantastic, off the charts, I'm sure. You actually think we're setting up for a, I don't know if we'll call it a boom, but a boomlet of some kind. What's your line of thinking right now, Marc?
Well, I think if I look at the various asset classes, obviously we had the boom 2002 to 2007, and commodities kept on rising until July 2008, and then everything totally collapsed. And the question is, when will the money printing by the various central banks around the world lead to asset market recoveries, and which asset markets will go up the most? I think if I look at equities in Asia, in the US, and commodities are very cheap in real terms. The CRB index went down to 200 the other day, now is around 210. And the low in '99, after a 20 years bear market, was 182. So we're up 10% from the lows, but in real terms we're at new lows. And compared to equities, I would say that some resource related equities are very cheap, and the resources in general, the industrial commodities.
Narrow that down for us. In other words, would you pick a type of industrial commodity or a company? Would you differentiate between the commodity and the companies, or for that matter, the geographies?
Well,
or for that
I
matter,
think
the currencies?
say oil servicing companies. And just now somebody mentioned Fluor. I would like to add other oil servicing companies as well. I think they should do okay.
Why?
Well, I think that the oil exploration will slow down because of low prices, and eventually the low prices, as exploration slows down, will lead to higher prices and again more exploration. And I think we shouldn't forget that the oil has a huge kind of geopolitical aftertone, in the sense that a country like China and the US, they need oil, and they need to become less dependent from the Middle East. And so that should continue to stimulate exploration.
What about those that would argue that America, as a industrial complex, as a group of creative and intellectual projects, is for sale cheap right now? The Dennis Gartman argument that you can I'll sell you some America on the cheap.
Well, America, if it was cheap, then the stock market would be at the level of 1990. The S&P would be at 300. In Japan, we're at the level of 1981. In Taiwan and Korea, that I assure you has as much intellect as the US on a per capita basis, we're at the level of 1987. So these markets, if I compare them to the US, are very inexpensive. And by the way, this year, Korea, Taiwan, and also Thailand haven't really gone down. In some cases, they actually rallied a bit by 1 or 2%. So I think that these markets would be relatively attractive.
Marc, thank you.
My pleasure.
You're relatively attractive yourself, you know. It's it can be applied in many contexts. Enjoy your weekend. Marc Faber with us from Toronto. I like the accent. He sounds very authoritative.